Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hello and welcome back to the Fintech Times News and Views podcast. We are back this week. There's only two of us. It's me and Francis. Polly is sadly missing again this week, but we're going to try and keep the energy up. We've got some great news to get through today. So, Francis, how have you been? What's the week been like?
Yeah, cheers, Tom. It's been a good week. I mean, I feel like, again, saying that every week, but every week is a good week, you know? If it wasn't, we wouldn't be saying it. It's been very busy, but it's been good, and looking forward to the conversations that we're going to be having today.
Yeah, absolutely. I agree. We always I feel like we always intro the podcast in the exact same way, but we always we're getting fintech news, we're going for it. It's the same thing. But with that, what fintech news are you bringing to the table today?
So today I'm going to be talking about the latest partnership between Klarna and Apple.
Fantastic. And I am going to be talking about a new survey from the Consumer Champion, which is looking into the broken credit report system in the UK. But with that, I think, why don't we go to yours first? It sounds like very interesting.
Yeah, sure. So, yeah, as I mentioned, there has been a new partnership between Klarna and Apple, as Klarna, the once known company for BNPL, and now probably more known as an AI-powered global payments network and shopping assistant, it has revealed a new service called Apple from Klarna, which will be a storefront in the Klarna app and the website, where customers can purchase Apple products using flexible payment options. So, as an official Apple reseller, Klarna is launching a new payment option for the tech giant's products called Upgrade Financing. Upgrade Financing enables Klarna customers to purchase the latest Apple Watch, iPad, and Mac lineups through low-cost monthly payments, and at the end of the loan term, customers can trade in their device and upgrade to the latest model, or they can choose to keep their current device for a final interest-free payment. So, the main reason I wanted to talk about this today is because it got me thinking about how many times I myself have actually used sort of a reseller, a different app or a different service that is reselling somebody else's product, and how much I really sort of am enticed to use something new because of a new offering, for example. Because although I've used Klarna to pay for stuff before, I've never used the actual app to go through and buy something, well, through the app, through its reselling front, or storefront, I should say. So I wanted to ask you really have you ever used Klarna before? Because like I said, I have, because I think it's very useful and very handy to have the pay in 3 sort of flexible payment option. But I've never actually used the platform. And do you think that these sort of partnerships are more likely to use a platform like Klarna's as a shopping assistant rather than just a payment method? Or do you think it's almost in vain?
Well, first of all, I feel like I'm one of the few people that has never used Klarna or any BNPL, actually. I feel like I'm too stuck in my ways of from when I was a kid. Like, you save up your pocket money to get your thing. I've still got that mindset today. I'm like, if I want something, I'm going to set that aside for my next paycheck or whatever. Next time I get paid, I'm going to set that aside and then I'm going to buy it. I don't really know what it is about BNPL that I haven't been like, oh, let me jump into that and make use of it. But I can definitely see, given the popularity of Klarna especially, that this type of offering would be very popular. And I think there's something to be said, especially for kind of Apple products, which sort of traditionally are more, you either buy outright from Apple or, you know, another retailer which is selling it for practically always the exact same price, or you get it through like your mobile contract. So you get your iPhone through for a contract that you pay off over 24, 36, 48 months. But, you know, they can be huge. If you want the latest iPhone, they can be hugely costly. And I think this is a nice offering, because what it really does is offer you an opportunity to get some of the other Apple products. And, you know, when you look at some of the prices per month, you can see why it'd be an enticing sort of prospect. You know, you can get a MacBook, I don't know what the new MacBook Air is, but a MacBook Air with M3 processing chips starting at $19.99 a month. And that, you know, is obviously, that seems like a very manageable amount. And then they're also giving you the opportunity to upgrade the offering. So I can definitely see why people would make use of it. I would be very interested to see kind of the cost difference between, you know, how much you spend on let's say you did that for a year or 2 years, how much you spend in total versus when you're buying it outright. I'm actually someone that also I tend to stray away from mobile provider as well. I like to buy my phone outright and then just get like a really cheap SIM to run it, because I work out that's marginally cheaper. If I keep the phone for 3 years, then I've definitely saved money. And I normally keep my phone for 4 or 5 years, so I'm like, that's the way I want to do it. But I can definitely see that if you're getting these really kind of enticing offers, why people would be inclined to go with that. And obviously, Klarna's such a trusted company now. They're not one that people generally go, oh, well, I don't know about Klarna. They might be a bit of a trap. Like, they've definitely overcome that kind of stigma that maybe other BNPL firms might still come, or see as a challenge. So yeah, I think I definitely can see why it's enticing. But I'm interested, is this something that you would use, or is the storefront something you're still a bit wary about?
I don't know if it's necessarily wary or just like kind of you said, it's just not a part of what I'm used to right now. It's not part of the routine. It's not something that is my go-to if I think I need to buy something. Oh, let me check Klarna to see if they have it. I mean, I feel like when you're getting all these incentives, all it takes is one thing to be like, oh yeah, let me see how this runs, or let me see how well this platform will perform if I buy this one thing. And just one good experience will suddenly make you think, right, from now on, I'm going to be checking Klarna every single time. So in that regard, I think almost, it would be worth having a look at, especially because, kind of like you said there, buying a new iPhone, a new MacBook, or Apple Watch, or whatever it might be, these things are expensive items, and that's usually where BNPL can be most efficient and most effective. So I think if I was to buy perhaps a new MacBook or something like that, I would want to do it through BNPL to make it more affordable for myself, because I've realized that, saving my pocket money isn't working right now. So I've been utilizing BNPL, and I've found it to be very useful, to be fair. So I think if there wasn't sort of an upgrade option at the end of it all, in my mind at least, that just sounds like a very, very good option to have. And again, yeah, I think it would be an interesting way at the very least to sort of introduce new customers to using the actual Klarna platform itself, in addition to the payment method on other e-commerce sites. So no, I think it's, in my opinion, I think it would be quite cool for someone who already is utilizing BNPL. But I guess from your point of view, probably not, since you're already not using it, or is this sort of the partnership that will make you go, actually, yeah, I'll give it a go?
I do feel like the more you see of this type of thing, the more it becomes normalized. And even if it's not something you use yourself, just the more you see it sort of offered by different firms and different companies and different collaborations like this, the more you might think, oh yeah, that's something that, I know a lot of people have done. They enjoy, they like the process. They like spending that money per month instead of having one huge outgoing, or paying it, for a mobile contract operator. So yeah, I can definitely see it being something that I would at some point be enticed to one day. But for right now, I'm sticking to my let me just save up all the money, put it aside, and then buy it in one go, because I'm just too scared to do anything else.
Yeah, fair enough. Well, yeah, I guess we'll see how it goes for Klarna's storefront, and if it really is that useful, and if people sort of show an interest and there's a big uptake. But yeah, with that, why don't we go to your article?
Yeah, absolutely. So, as I said at the beginning of the podcast, the consumer champion Which has warned that many people are being left out of pocket by a broken credit report system that it says are riddled with errors and lacks transparency and accountability. Now, this warning comes after it surveyed over 4,000 people in the UK and found that 32% of respondents who checked their credit report discovered a mistake, which it said can have a hugely negative impact on people's lives if they're turned down for financial products, and could even wreck dreams of securing a home if they're refused a mortgage. And it says that in theory, most of these mistakes should be easily correctable. The consumer should just have to notify the credit reporting agency, then they should mark the information as a dispute and query it with the firm that says, you've missed a payment or you're in debt or whatever. But however, from the survey, which found that most of the people that it interviewed said they had to do most of the legwork to amend the errors themselves when they spotted one. And it revealed that one of its members actually spotted a mistake on their credit report, and they contacted British Gas, which is who the mistake was with. And British Gas actually got back to them and said, "Oh, yeah, we acknowledge that you have no debt with us, and we're going to sort it." However, the credit report provider Equifax was told by British Gas that the data was correct and it shouldn't be amended. And it was only after Which got involved that British Gas then did correct the error and apologised for the delay and send the member a goodwill payment. But I mean, as you know, the vast majority of people are not going to have a Which on their side to just step in and be like, "Oh, by the way, you need to sort this. This was an error." And I think that's something to be a little bit worried about, because you can have a company acknowledge they've made a mistake, and yet on another day, someone else that works for the company doesn't rectify the mistake, and therefore it doesn't get sorted, and you end up with this issue on your credit report, which has nothing to do with you, isn't a debt, or isn't a default on your account. And I think that's obviously a hugely worrying subject. And finally, Witcher survey also found that just over half, around 52% of UK adults, also thought they would be alerted if a negative entry appeared on the credit report, but Which explained that this isn't always the case. And the only way to know for sure if an adverse account, such as a debt or a default, appeared on your file is to just check it yourself and be really thorough when you check it. So, following the survey, the Consumer Champion is calling for huge reform of the credit report system to make it simpler to find information and amend mistakes that could stay with consumers for a long time, and as I said, just affect them negatively in a number of ways. And with that, I just thought this was a really interesting topic, because it's something that can have a huge impact on not only people's sort of financial sort of well-being, but just their lives in general. It could stop them getting a mortgage, could stop them taking out loans, could reduce their access to credit. And I just wanted to get your take on the story, really. What's your sort of first sort of thoughts when you hear about the story, and does it surprise you that these kind of mistakes can happen? We're in this sort of day and age now. We've got all this technology, and yet we're still having such simple mistakes that are impacting people so hugely on their lives. What is your take on this?
Well, yeah, massively. It's really surprising that my initial response is that it's very surprising that we are still seeing these sort of mistakes. But I guess the reality of it is that they're bound to happen, because despite the advancements that we sort of get from technology and stuff, I guess at the end of the day, there's always going to be these errors of people not understanding how to properly utilize it, or just a breakdown in communication. And I think it's that point on communication and sort of transparency which really sticks out to me the most, because as a consumer, I think the most frustrating thing is when you're not sure why you're getting sort of negative credit, and you're looking at your credit score, but you didn't get notified that it was bad. Last time you checked, it was good. And now when you've checked it, it's completely different. And normally people will check their credit scores when they need to apply for a loan of some kind, or, they'll check it when they, as a way of, I don't know, making sure that, when they apply for something, it will be approved. They probably aren't checking it that much on their day-to-day. But I think that's probably where the issue lies, because I think if you're checking it sort of intermittently and quite rarely, then if there's a fault from the technology side where it's not alerting you for whatever reason that, you have you are in debt for something, or you need to pay something off, I think then the consumer's well-being sort of takes a massive dive without them even knowing it. And I think this whole issue of sort of transparency and communication, I think firms and sort of banking providers and lenders, they all have to work sort of together to allow consumers to have like the best understanding of their credit history, so that then they can best access services, and in turn it makes just a better sort of financial environment for everyone. But I think what was really interesting in the article is that it said that of the survey respondents who had checked their credit score, 70% said they only did so with one of the providers, being Equifax, Experian, and TransUnion. And they said that the report found that most lenders rely on information from only one of those credit reporting agencies, but won't tell the applicants which one. And that just adds to uncertainty, adds to confusion. And I think it really just, it makes the whole process a lot more difficult than it needs to be. And if they just didn't do that and were more transparent, I think loans could be agreed much quicker. the sort of approval ratings would be probably much higher, because people would understand why they can and can't apply for things at a certain time. So yeah, no, I think it does surprise me that we are still facing these issues. And I think the only way that they can really be solved is if everyone sort of works together.
Yeah, I completely agree, and I think you've summed that up really nicely. I think the only other thing that comes to mind to me is just the fact that sort of the credit sort of sphere that exists is so like confusing. I think most people just really have no idea like what it is that really impacts their credit rating. You know, what should they have on their credit report, what shouldn't they have on their credit report, and they don't know how it works, so they can't really amend the certain things. I think one of the things that the Which article points out is that there are 3 versions of credit reports, which are provided by Equifax, Experian, and TransUnion, and each one collects its own data from lenders and open information sources. And only 35% correctly said that there are 3 different versions. And essentially, you know, if you're only checking on one, you might not be getting the full story because they collect data from different areas. So I think that's a huge thing as well, is people just need to be more aware of how the credit system works. And I think news stories like this from Which really do help to do that, because they really shine a light on the fact that there is an issue here. And while they're doing that, they're also just trying to get the message out. Well, by the way, there are these sort of free suppliers that or providers of credit reports. And, you know, it might be good to be aware of that next time you're involved in this type of process. And hopefully that's the kind of message that gets out there and just makes how the credit system works a bit clearer to people. And that will hopefully in turn, alongside the collaboration that you were talking about, really help make an impact and just kind of reduce the mystery that sort of surrounds credit. And in turn, then that'll make people more aware of how they need to sort the issues that they have with it. But as you said, with that, I think, you know, we've summed that up very nicely, and I think you've made some very good points on that. And yeah, I think it's been a very, very interesting story to talk about. And as always, if you liked what you heard from us today, or you want to find out any other fintech news stories, then make sure you head on over to the Fintech Times. And that leads us on to our final segment, which is what I learned this week. And because every week so much news from the fintech world and insights crosses our desks, we like to pick something a little extra out to share with our listeners. So Francis, what is it you've learned this week?
So this week I learned that the Power 50, a renowned organisation for showcasing the brightest and most innovative firms and people in fintech, has launched a new vertical to focus on payments exclusively called the Payments Power 50. And yeah, it will be highlighting and sort of bringing to light the best payments minds in the industry. And I thought it was just a really cool launch to have a specific focus on probably the biggest market in fintech.
Fantastic. And this week I learned that as much as 4 out of 5 UK businesses are currently struggling to source the talent they need to address today's IT challenges, of which obviously there are many. And this basically presents a huge number of negative impacts across sectors to the workforce. And that's according to a new report which I had a look at from Hive Managed Hosting, which is another article you can check out on the Fintech Times website. But with that brings us to the end of the podcast. So thank you very much for joining us. We'll be back next week, hopefully with the full team, ready to bring you more fintech news and insights. And Francis, I will see you next week.
See you next week.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.